Hello everyone, welcome to the beginner's guide for reading and understanding charts. In this video, I'm simply going to go over the three fundamental analysis that we need to be able to actually understand trades and to be able to take them. All right, so I know I said fundamental, but there's really three types of analysis that you need to be concerned about, right? The first one is called a fundamental analysis. Second one is a sentimental analysis. And finally, technical analysis. Okay? So what sentimental analysis means is any moves that happen in the market and how typical retail traders will respond to that. Okay, so let's say, for example, the stock market, right? Best example would be, let's say, we'll pick a random one, Costco. Okay, when Costco has earnings, and I'll just bin the drawings. When Costco has earnings, what happens in that situation is there's going to be a lot of sentiment, right? So here, whatever the surprise is, above earnings doesn't really matter, right? As you see, regardless of what the earnings are, they were reported here. The next day they dropped, and the following day they blew up. Okay, so as you can see, right, when earnings are reported, they are typically reported in after the trading day is over. In rare circumstances, there's some companies that report before trading begins. Right, on average, it's after. So it dropped $4, so 0.86 cents, right the day after earnings, and then for whatever reason, after it dropped, it closed the following day up 6%, right, from the previous close. So what this entails is a lot of sentimental plays in regards to that particular stock, right? There seemed to be interest to be able to push it down, but when people understood what the earnings report meant, they really wanted to get in on this and make a quick buck, right? So that's why you see that big jump in 6%, and then it kind of went sideways for a little bit. Right? I mean, yeah, gained some more afterwards and then steep drop, right? So whether or not this beat projections, right, and it says it did, this is what will really contribute to sharp moves on those specific days, right? When it comes to Forex, sentimental analysis really depends on a couple specific facts, right? So what I like to call them on Forex Factory, that's what I use for sentimental and fundamental analysis. What I look for are particularly the orange and the red folders, right? So as an example, on July 7th, which is today, we see that there's a few orange folders to take a look at, which means that there's a moderate impact to the market, okay? Whenever you see red folders, that means there's a good chance it's going to be a high impact to the market, as you see when I highlighted what the tag says. There's a very strong chance that in these impacts, right, this is kind of like the freebie that a lot of big players, especially banks, can use in order to move the market very quickly in a short period of time. Okay, so just to give you an example of something like that, let's jump back on TradingView and I'll give you an example. Okay, so let's say, let's pick USD, right? We just had USD CAD. We just had the Fed come out with a statement today. Okay, so if you take a look, what that is like, that would be these impulse moves. No, that's not quite it. Let's switch over to the 1 hour. The 1 hours are typically the ones that give significant movement, right? But this is at 2 a.m. my time, so this happened during European hours being open. When you see this kind of moving, like with a stable movement, I really don't like using the same words, but anyway, when it's stably moving kind of sideways, right, the big impulse plays are what you want to be looking for. So 8 a.m., right, on July 6th. Let's take a look at Forex Factory and see what was happening July 6th, 8 a.m. Look at that. Job openings, you see that it beat projections. What does that mean when we click on the folder? Number of job openings during this reported month. excludes the farming industry. Actual greater than forecast is good for currency. So 8 a.m. on July 6th, my time, let's see what happened. 8 a.m. July 6th, my time. So as you can see, this was pretty volatile in the specific time frame. Okay, so let's see 8 a.m., right? As the news came out, you see this big doji being formed and then slowly moving upwards for the hour. Okay, what typically happens during peak news periods like that, there's going to be a sharp spike of interest in both directions. That's why you're going to see big wicks and small candles at times, or giant candles without any wicks, right? So for example, 6 a.m. July 5th, let's see what news we had there. Okay, July 5th at 6 a.m., there wasn't any U.S. In particular, but it's the USD CAD. So for CAD, it was 6:30 a.m. building permits. It's a yellow folder, right? But as you can see, 6 a.m. it just kind of started spiking up, and by 6:30 it kept climbing. So in anticipation for that news, this was already moving upwards. Okay, so this is something that's very important to use for sentimental analysis and fundamental analysis, right? What is great to use this website for your fundamentals are going to be not particularly the meeting minutes. This is going to be more for sentimentals, right? So when they announce that there's a potential for interest rates to increase, that might either make people a little bit bullish or scare them a little bit, right? What really are the important ones to look at is going to be something like unemployment rate, employment changes, right? So both Canada and United States are having their report come out on July 8th. And then the weekend, of course. But let's see where we have other red folders, right? Official cash rate. So that's very important for New Zealand, right? That means that's when they're going to announce their interest rate. And as you can see, it's at 2% right now. The forecast is that it's going to increase 0.5%. And once it does, this is kind of what will determine the long term where this particular currency is going to go. So if it goes up to 2.5, that's going to be the highest interest rate out of all of the major and minor currency pairs. So that would kind of put New Zealand dollar at a very strong position, right? Not necessarily meaning that it's going to climb, but in the long term, that's what's expected, right? Hence the fundamental analysis. So then when we jump on our charts, let's go USD NZD, right? Here we go, NZD USD. Okay, so what that will mean in the long term, and we'll flip it over to the daily, is that New Zealand dollar should start increasing. Okay, and I'll just delete the drawings. That was done a long time ago. Okay, but as you see right now, the US dollar has been much stronger than the New Zealand dollar, so it's been dropping. What that means for interest rates, if the US has a stronger interest rate than New Zealand, or if it's even close, because as you know, the United States dollar is the strongest currency right now. Okay, so even if New Zealand increased their interest rates, it doesn't necessarily mean that it's going to beat out United States dollar. What it does mean, it has a strong potential of that happening, right? But at the same time, it's for that particular pair. The yen right now is the weakest, and the Swiss franc. Okay, so let's take a look at this, for example. As you can see, don't mind those drawings again, I'll remove them. Okay, but as you can see, it's been going up for quite a long time. Then April interest rates kind of pulled this back, but overall it's still climbing. Okay, so it's been climbing for quite a long time. Okay, and that's because the New Zealand interest rates and the dollar is stronger than the Japanese yen right now. Okay, so that's kind of what it means in the long term. For example, if you want to take a year-long trade, or a 2-year-long trade where it dropped down during peak COVID at March 18th, right, where the New Zealand dollar was valued at 61 yen, right, there's a potential to take a trade. I mean, this is what the banks end up doing as well, right? They do long term. So right now, over the last 2 years, just over 2 years, right, it went up 35% for the currency rate, right, which is a potential 2,200 pips to grab off one currency just sitting in it. Now, the likelihood of any one of us doing that sort of thing on Forex trades is very slim. right? There's very, very few people that hold currency that long term. Okay, typically it's cash out, maybe a couple months holding is the max, but doing it for over 2 years, it's extremely rare. But as an example, that's kind of how to look at that, right? So interest rates have been high for New Zealand, they've been low for Japan, meaning that New Zealand currency is stronger than the yen. And as you see over the last 2 years, the chart matches that fundamental analysis. All right, so this is what we call technical analysis. And within those two other types of analysis, this is where we take a look at market structure and potential reversal zones. So I'm a big fan of Fibonacci. If you guys have watched any of my other videos, watch this, okay? So the lowest point, I mean, before we form a new one, I would say is this one, right? Before we continue on the dailies, this is the lowest point, and this right here would be the highest point. So I'll just extend it across, okay? And if you watch the Fibonacci tutorial, you'll understand that it does a reversal right at the golden zone, right? So based on just one indicator, I'd be able to tell you that it has a very strong chance of hitting this area and then going right back up. You see? And then what happened? It hit that area exactly and then started climbing, right? It didn't make a new high, but once it hits a peak, goes down and makes another peak that's lower than the previous one, that's kind of my sign for exit, to take an exit on the trade, right? So for example, how long would that trade have lasted if I entered right at that line? That trade would have been 41 days, so just a little under a month and a half. And we would have gotten out right there because the next red candle, right, it formed two peaks. It didn't beat its previous peak and then it dropped the next day. So I'd be out that following day. And that would have been a 576 pip grab over the span of 41 days. Okay, just based on one type of indicator. Okay, and once you watch all the videos, I have plenty of how-to videos about setting up other indicators. There's going to be a plethora of information that you can sift through in order to be able to make educated decisions regarding your trades. Later on in the season, I will very likely post videos and tutorials on how to set up for my strategy. It's a very solid strategy as far as you know what it's meant for. It's meant for kind of more beginner traders, and it's meant for checking charts twice a day, right? So it's not something that you have to be very focused on. It's meant for those people that just want to try this out, see how it plays out, you know, on demo accounts, that sort of thing, right? And if it works for them, by all means, do what you like at that point. I can't recommend what to do because I'm not a financial advisor, nor do I want to be liable for someone losing money and blaming me for it, right? That's kind of the big one. We're not looking to get sued based on people's bad decisions. Okay, so one other thing that I'm going to try to work on is doing mindset tutorials, because 90% of what you do is all up in your head. All right, that's one analysis that's not really part of the triad that I told you about earlier, but mindset is incredibly important. Right? You have to have your mind right, and you have to be able to understand that money in this situation is just a tool. You have to be comfortable losing everything that you put in order for you to get into the mindset that you're doing this based on your analysis, and you trust your analysis, not your gut feelings or not any emotional states, or no revenge trading, meaning that if you lose a trade and you are almost certain that it's supposed to go a certain way, you enter again and then lose that trade and then get frustrated and then enter again and then lose again, right? Like it's a terrible situation to be stuck in. So I think that those are going to be extremely important, and I will do mindset videos as well to be able to help coach you along to get into that state of kind of not caring about your money, so to speak, right? That's kind of the best situation to be in. Go in without any emotion, and then all your trades and analysis will be that much more clear. All right, well, so far I hope that this video has helped you. Stick around for the next ones in the series, and take care. I'll see you then.